Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look at the euro currency again. So as you can see on the daily chart, the setup for recent week has been completed. So last week report we have discussed in possible appearing of the regardless triple to sell pattern. We said that probably market should hit the 117.60, 117.50 area. This pattern, as it stands inside the triangle, as you can see that the price right now stands right at the border of this triangle. It really could become the pattern that could trigger downward action. Why we still talk about the possible leg down, as we see that this really was the 2-week rally recently. Well, guys, there are some reasons for that. So we have the fundamental reasons and we have the technical reasons. Fundamentally, if you will see the recent driving factor for euro, it was the weakness of the United States dollar, and this weakness has been driven by non-farm payrolls release, or particularly speaking, the wage growth, a bit weaker numbers. So definitely this is the short-term factor, and its impact will not last for weeks. It was just a moment where the date has been released, and we see the result of that, and probably this will be the end. Because fundamentally, situation in the United States economy looks better, and the disbalance between the policy of the central banks is also really important. So fundamentally, hardly we will see a long-lasting effect of this recent non-farm payrolls release on the euro currency. Besides, in general, this report was not bad. Its numbers have increased, and wage growth was not at 0.3 but 0.2, but still the inflation present, and this is sufficient to make fragile this recent rally. Second fundamental issue is that we do not have real bullish sentiment in the euro. So the last few weeks we see the contraction of the long positions and growing open interest. It means that the new shorts are coming to the market. This makes recent rally fragile. And since we see the technical bounce, but with no support of the new long trade opened, it makes this recent rally is not quite reliable. That increases chances that market indeed could turn down. From the technical point of view, one reason we already have mentioned in the previous reports. This reason is that actually market hasn't tested the major support area on the weekly. It stands at 114.50, but reversal has happened 114.80. So market has stopped somewhere in a space and turned up. This turn up was reasonable because that was due to the weekly reversal. So market hits the reversal and turn up. But this reversal, it's a bit surprising, not quite natural, so because the major support has not been tested. Finally, turning to the shorter term charts, if you'll take a look at the follow time frame chart, you'll see that multiple reversal pattern has been completed. First of all, our ABCD pattern. Here it's the regardless triple to sell, and the part of the CD leg takes the shape as a butterfly. This also has been completed. It's 127 butterfly. The CD leg here, as you can see, flatter than all AB, and this is signs of weakness. So when the CD leg stands flatter, it has more chances to turn down and shows the reversal rather than just a retracement and then upward continuation. This is important. Finally, on the hourly chart, we see that minor butterfly also has been completed. It's 1618. If you remember, we also have talked about this pattern in the last daily video. It's 1618 target has been completed. And take a look, upward action has started precisely at the weekly pivot resistance 1 as we have suggested. Also, guys, take a look that our call for managing stops right at this point were reasonable. As we said, managing stop will not hurt your position, because if payrolls will be negative, you will get the direct right up, right straight upside rally right from this point, and that has happened. So this is a very important moment to manage positions before, especially if it stands in profit, before major event will happen. This very important work. So anyway, this reversal pattern has been done. I mean the butterfly. So currently we do not have clear bearish signs yet, because this action just has completed on Friday and just a few hours has passed since the upward has been done. But this bounce from the major resistance looks solid, because as you can see it's really strong reversal candle here. And on the next week we should be ready for a possible downward reversal. I'm not sure that definitely will happen, but here we need to keep an eye on a few moments. First of all, take a look at this trend line. That will be the first indicator that something is changing. And if market will drop below it, it will be a clear sign that we could get downward continuation, and who knows, maybe we will return back to discussion of the butterfly on the daily chart. Because as you can see, that could become left wing of the butterfly, right? And that could become right wing of the butterfly. It stands 114.16, and it will be enough to test the weekly fib support area, major fib support. Conversely, if market will confidently break 117.80, 1 and 118 area and will hold there, that probably will say that will tell us that the upward action will continue. So just a few moments. So this will be, let's call it as the culmination point. So either if market will turn down, it will definitely turn right from this area, because this is the logical finish for multiple reversal patterns. Hence, we could make the conclusion, if market will not do that and accelerate further and will hold about these stops, it will tell us clearly that further upward action will follow. So that's what we will do in the beginning of the next week.